All right, we got a whole bunch of stuff that we got to go over. Let's start with first, just a general sentiment check. How are you feeling about the Bitcoin market, where we are coming into the end of the year? Has anything changed?
Nothing's changed. I think the timeline is a little bit delayed, like compared to what a lot of people thought in the fall at the beginning of Q4. A lot of people were kind of expecting to see higher prices than today, and for all-time highs to be for all-time highs to continue to be made here. But in terms of the thesis, in terms of what Bitcoin is and where we're going with this whole thing, nothing has changed. And I think that's what we're going to dig into a little bit today.
All right. So when we start looking at some of the charts that we have here, the first that we're going to pull up is this Bitcoin store of value, medium of exchange, or unit of account. And you just have what looks like the price pulled up in terms of over the years. What exactly are you showing here?
Yeah, so this is more of just like a kind of a title slide. I saw some of the Jack discourse last night. And the next slide, it was a question that says, do you think that Bitcoin will replace the US dollar? There's definitely a lot of debate. Bitcoin is digital gold, or Bitcoin is going to displace the dollar, or Bitcoin to some people is a Ponzi scheme. But really, I think, we're going to use some metrics today and look at some charts and kind of break down what I believe. And I think what a lot of people that are Bitcoin proponents believe is that Bitcoin is actively becoming, or is already, all three. And the data kind of shows that.
All right, so if we start with the first chart, we've got the issuance rate and the circulating supply and market cap all overlaid on each other. What exactly is this showing?
Yeah, so this is kind of supporting the store of value argument, right? So you hear a lot of people increasingly over the last couple of years, this has been an accepted kind of proposition. Bitcoin is digital gold. It's a digital store of value. And while that was controversial for a long time, a lot of the skeptics, besides a few, have come to accept that, Bitcoin is a store of value. And in the 21st century, especially after the kind of COVID madness and all of the trillions of dollars of stimulus, Bitcoin is a store of value. And so, it's the one thing we know that it has a hard cap, is absolutely scarce in the world. This issuance rate or inflation rate is programmatically trending towards zero over time. The blue line, that's actually in log scale. So in linear scale, it looks like the issuance rate is already basically at zero. And the market cap is really just a testament of people around the world allocating, resources and capital to this asset class because of its monetary assurances. And so the store of value argument is stronger than ever, but I don't think it stops there. And that's when the discourse gets a little more interesting.
Got it. And so really what this is showing is as that issuance rate goes down, or some people could think of that almost as like an inflation rate, the circulating supply goes up, right? Because we're getting more and more Bitcoin is just at a slower pace. But the market cap has continued to grow at the exact same time as well, which ends up being kind of what you would expect if you've got a finite supply asset with a disinflationary monetary supply schedule and increasing demand, is you're going to continue to get the price to go up, even though there's a little bit of Bitcoin still coming into the market. The demand outpaces that, and that's where you get market cap growth, right?
Yeah, exactly. I mean, it's pretty simple. It's how many dollars are going to exist in 2030 or in 2100, right? No one knows. No one knows really for any other asset except Bitcoin. And you know this because you can run a full node on an old laptop, or you can verify the supply on your smartphone. And there's no other technology. Yes, there are other crypto assets that are somewhat transparent, but the thing is that none of the monetary policies of these other assets or digital assets are basically as tried and tested as Bitcoin. No one can change Bitcoin, and every protocol change that has occurred has been opt-in, voluntary. It's a soft fork. There's no hard forks or changes to the monetary policy of Bitcoin. Whereas other crypto protocols or assets or currencies, if you want to call them that, have done that plenty of times. So in terms of absolute scarcity, nothing in the world has or can compete with Bitcoin.
The next thing we've got is the hash rate, 70x since 2017, which is a bonkers number. Explain why you think this is so important.
Yeah, so this is kind of on the store of value side of things as well. 70x in the last 5 years, just kind of understanding what that means, what hash rate actually means. You can, for people that are more kind of visual and don't really understand what Bitcoin mining is, think of gold miners going in with shovels and excavators and digging into the earth to find this monetary asset. Well, think about if that had increased 70-fold over the last 5 years, just the amount of expenditure and the amount of resources that are going into actually extracting, that shiny rock out of the earth. Well, Bitcoin is that, but in the digital form, and it's doing it all over the world with sometimes nothing other than just a satellite signal and a wasted energy source where there is no economic value. And it's basically securing and being rewarded. It's securing the most powerful computer network in the world, and they're being rewarded with the only absolutely scarce monetary asset. And so incentives are aligned. That's all Bitcoin is just economic incentives. It's completely voluntary. It's opt-in, and hash rate continues to grow at a just mind-boggling exponential pace.
When we think about the entire network hash rate in 2013, that is equivalent to one S19J Pro. Is that true?
Yeah. So the S19J Pro, it's top of the line, new ASIC. But that basically spins off 110 terahash a day. I think it costs around $15,000, maybe $20,000. It's extremely hard to get miners with all the kind of supply chains backed up, and they're back ordered from months or years. But yeah, one ASIC, one new top of the line ASIC is equivalent to the entire network hash rate in 2013. And so it just kind of shows you Moore's law's in play there, with kind of semiconductors becoming more and more efficient. But that just shows you just absolutely insane growth and just amount of physical capital and resources, backing this network. There is definitely a tangible aspect to it, despite it being, thin air, or, what a lot of people like to call it.
Yeah, it's pretty incredible. When we look at the next chart, we've got Bitcoin is on pace to settle 45 trillion in 2021, totaling twice as much value as all of its previous years combined. That is an insane number.
Yeah, so this is a chart from Issuance at ARC. They put out great stuff. And this is just this is going into more of the medium of exchange aspect of it, right? So everyone gets store value. You can buy Bitcoin, you can leave it on Coinbase, or you can send it to your cold storage, and you can sit there and watch it. And it's a pretty strong bet over time that it'll increase your purchasing power, just due to the absolute scarcity of it and due to the adoption curve and more people coming to this asset class because of those properties, right? But most people, or less than the amount of people that understand the store value side, don't really, the medium of exchange, or maybe the settlement aspect of Bitcoin, is very underappreciated. So this network, in a completely apolitical, sovereign way, where there's no CEO, there's no board, there's no off switch, right? China just picked up, and 50% of the network was forced to shut off overnight, and Bitcoin kept on chugging, right? So $45 trillion, or on pace for that in 2021. It's a pretty insane number. And so, you're doubling Visa, I believe. And that's, pretty different when you're looking at settlement assurances. But say the best comparison is Fedwire. Well, that's, we're already 6% of the way there compared to Fedwire. And so I wouldn't bet on this trend stopping anytime soon. And that kind of supports the more medium of exchange aspect to it. There's, final settlement all over the world, 24/7, 365.
Yeah, it's pretty incredible. Bitcoin, the cumulative network transfer volume, 22.6 trillion as of 12/21, which is today.
Yeah, so that's the first chart showed just total volume, and this one I should have labeled it a little better. Shows change adjusted transfer volume. So the Bitcoin UTXO set, when say you have one Bitcoin and you send 0.5, well, I send 0.5 to you, Pomp, and 0.5 Bitcoin goes back to me, and that's a change. That's change for the UTXO. And so technically, change adjusted volume just filters out that 0.5 Bitcoin I sent back to myself. Just that's how Bitcoin transactions work. And so over the course of its history, Bitcoin has done $22.6 trillion of change adjusted volume. And that's, obviously hockey sticking up and to the right. And so it just kind of shows you that, this protocol is continuing to grow. And in terms of medium of exchange, it's a lot bigger and does a lot more volume than people think.
Which means that Bitcoin in 2021 has done over 10 trillion, right? So, about 10 to 12 trillion of this, about half of it was done this year in 2021 compared to what it's done since its beginning of its life.
Yep, correct. It's pretty insane.
Yeah, absolutely nuts. And I don't know the exact Visa settlement number, but I do believe that Visa's annual transaction volume is now right around what Bitcoin's is. Like they're much closer than you would think, right? I think that Visa, if I remember correctly, is somewhere in the like 14 to 16 trillion number. And obviously Bitcoin being at, let's call it 12 or so, hasn't quite eclipsed it yet, but we're getting pretty damn close.
Yeah, and I think a lot of people, it should be said that, comparing Visa to Bitcoin, it's definitely a cool kind of comparison and a milestone. But just in terms of settlement assurances and settlement finality, it's a lot different, right? Swiping my card at Visa, basically they have an internal ledger and they just debit someone and basically just change the ledger a little bit, but it can be changed pretty easily. There's no final settlement for sometimes weeks or months on end, and at the end of whatever period that is, the bank and Visa will transfer over, billions of dollars, and kind of that's the final settlement. But when people are comparing, you say, a 10-minute Bitcoin transaction or Bitcoin blocks to Visa, it's definitely the wrong comparison. And I think that this next chart that we'll show is more apples to apples.
All right. Now we've got the Lightning Network public channel capacity.
Yeah, so this is in USD and it's in logarithmic scale. So the growth is a lot more impressive if you're looking at it in linear terms. But this is public channel Lightning Network capacity. So back in 2017, back when there was the scaling wars, Bitcoin can't scale was the narrative. The solutions were Bitcoin Cash or other altcoins. The payments narrative, despite not being dominant today, was pretty big back then. And there was a lot of questions about how could Bitcoin ever be this, as some proponents would say, world reserve currency if it could only do 7 transactions per second, which is completely the wrong way to look at it. So here comes the Lightning Network, and with the SegWit soft fork in 2017, there was some upgrades that could allow for the Lightning Network to be built, which was just a concept conceived in 2016. So since then, you basically have this Lightning Network, which is just an application layer or a software layer above the Bitcoin network, and it's completely open source. It's completely opt-in, and basically it allows for Bitcoin payments to occur somewhat instantaneously and for basically no cost or little to no cost. And so we've seen that growth is exponential, and you're seeing a lot of companies like Strike and OpenNode and companies all over the world just basically opt into this open for basic, not free, but voluntary settlement layer on top of Bitcoin. And so this allows for micropayments. This allows, I can send you 1 Satoshi Pomp. And so that's something that was never possible with Bitcoin on the base layer. And this is basically how Bitcoin will scale to billions and billions of people. And it's not appreciated nearly enough.
Completely agree. Bitcoin price drawdown from all-time high. When you see this, all of a sudden, maybe we shouldn't be complaining so much, because there are some epic drawdowns over the years. But what is this showing?
Yeah, so we covered store of value, we covered medium of exchange. What's the last one? Unit of account. So how could Bitcoin ever be a unit of account if it's this volatile? So obviously, we're looking at a logarithmic scale of Bitcoin in the background there, and the red is showing the drawdowns from all-time high. So really kind of what this is pointing at is, the volatility is the price you pay for returns. And when something is growing in exponential fashion, you will see very standard double digit, 20, 30, 40, 50% drawdowns along the way. And that's just basically more opportunity to accumulate and to, just to get your hands on this pristine, absolutely scarce asset. So currently, 31% down from all-time highs. For anyone that's been in Bitcoin for more than a couple months, even, it's really nothing, and it's an opportunity to just continue to stack. So just some context, and the next few charts here will break down why Bitcoin as a unit of account is quite superior.
All right, now we've got S&P 500 as just the first chart. Let's just do the actual price chart itself.
So stocks only go up, right? Or at least that's what
facts.
That's what has we've been taught over the last 24 months or so. But why is that? And a lot of people think they're getting rich, especially asset holders. Everything's going up and to the right, but in reality, it's more of a farce or maybe a facade, and actually it's just the money is debasing. So what happens if we standardize S&P 500 and we put it in M2 money supply terms? It looks a lot different. And so what we're looking at since 2020, if you just standardize this chart in terms of M2 money stock, the S&P 500 is basically flat. And so a lot of people that think they've gotten pretty rich over the last 18, 24 months, in reality, it's just a function of monetary expansion. And so this kind of leads you to believe that the dollar over the short term, while I guess the Fed or other, kind of public officials would call it stable, it's actually a melting ice cube, as some would like to say. And if you're valuing anything, whether it's assets, goods, services, home prices, anything in dollar terms, it's gonna kind of skew you to believe that things are getting more expensive. When in reality, many things are getting less expensive. It's just the currency, the unit, is devaluing. And so here we have a solution, which is Bitcoin.
Got it. And so when you divide it by this M2, it doesn't look so hot. And my guess is that if you actually went ahead and you denominated this in Bitcoin, obviously it would be down significantly, which I think is it is your next one. Of course, you're 2 steps ahead of me. Go ahead.
Yeah.
It's like little breadcrumbs, right? Like you're just, this is like a little game. Go ahead.
Yeah. So, volatility obviously is there. You see in March of 2020, that big green candle, but over the long term, Bitcoin is the best unit of account you can use. Nothing else is absolutely scarce, like we've kind of covered. And so just denominating something as simple as S&P or even individual stocks in Bitcoin terms will lead you to be one of the best or most ahead of the game capital allocators out there. And I think this is kind of the strategy for savvy investors over the next decade. And it has been in the last decade, but increasingly, I think it'll become the standard is denominating your returns against Bitcoin.
All right. And then lastly, you've got MicroStrategy, both against dollars and Bitcoin. How are we looking?
Yeah. So talking about going on a Bitcoin standard, valuing your company, valuing, your assets in Bitcoin terms, here's MicroStrategy. Since they've adopted a Bitcoin standard up 282%. Obviously, some pretty spectacular growth for a company that was kind of treading water for the last decade. And now if we denominate it in Bitcoin terms, they're doing fantastic and they have 110,000 Bitcoin, but their share price in Satoshis, their share price, in Bitcoin terms has basically surprisingly, or maybe not surprisingly, been flat, right? So they have actually kept pace with the Bitcoin standard. And so few companies can say the same. And I think this will become kind of the way that, savvy investors and increasingly everybody will have to value things in the 21st century. Bitcoin is the most superior unit of account. And if you're valuing things with Bitcoin, yes, there's short-term volatility, but over the long term, you're definitely ahead of the game and you'll get a step on people who are not.
How do you think about Bitcoin when it starts to become less volatile? So obviously everything is kind of crashing against Bitcoin because Bitcoin's price is going up at a pretty insane rate compared to US dollars. If Bitcoin is to eventually reach price stability in US dollar terms, which may or may not happen, but if that was to occur, how do you think about it then being denominated all these other assets?
Yeah, so I think if you look at a lot of things, there's a pretty fantastic chart out there that I don't have on me at the moment, but it's over the last 20 years, the price of everything, from like technology to education to healthcare to consumer goods and the university education, and basically everything that technology has touched is way down. The price of the price of a TV or a semiconductor or just an iPhone. Think about how much an iPhone gives you over the last 10 years. Well, maybe the price has gone up, but the value is gone way, way up. So actually technology, it's deflationary in the sense that you get more for less. And so when you don't have that expanding, monetary unit, the dollar, expanding money supply that's chasing everything that's becoming more expensive over the last decade or two, it's because more dollars are chasing that. University education, subsidized. Healthcare, subsidized. All of these things that are becoming way, way more expensive is because essentially the government or, just the economy in general is chasing throwing an increasing amount of dollars at it. And so that's why you see these things becoming exponentially more expensive over time. I believe on a Bitcoin standard, on an absolutely scarce monetary standard, global monetary standard, things will gradually decrease in price over time as the money accrues value. Basically, as the world becomes more productive, your money accrues value in everything else. And so I think that's what what the future holds, and you won't see these exponential gains that we see over the last decade, and I think over the coming decade. But I think you could expect with human productivity, your purchasing power would increase 1 to 2 to maybe 5% a year, depending on a Bitcoin standard, and I think that's pretty exciting.
When you start to think about how well people understand this, like what's your take on the Jack Dorsey Web3 tweets versus kind of the Web3 pro argument, if you will? Like what do you think?
Yeah, I think I kind of agree with Jack here in the sense that I'm all for the free market, and I'm all for people going and building things and trying things out 100%. But I think a lot of the incentives are skewed in a lot of these, if you want to call it Web3 applications or ecosystems, whether it's with and not that investing is bad in general, right? The argument for a pre-mine is, well, every stock or company is pre-mined, and that's fair. But if we're talking about a company or a security versus an open protocol, I think it's a little bit different, or actually a lot different. And so Bitcoin, crypto kind of gets all lumped into one. And I think it's quite different. We covered it a little bit last week, the differences between, say, Bitcoin and Ethereum. And I'm fine. I'm all for the free market. I don't want regulators to come in and clamp down on these builders or engineers at all. But I think just in terms of, say, an open internet and so-called decentralization, a lot of it's more decentralization theater. And that's fine. I think there's quite a difference between, say, Bitcoin versus what a lot of these other tokens, protocols, Web3 applications are doing. And that's fine, right? But just, saying everything is going to be on a blockchain or creator economy and everyone's going to have their own personal token. It's ambitious. And so we'll see what happens. But, I think the biggest kind of idea in the room is, what Jack thinks, and that's sound money for the world. I think that's the big idea here.
John, what questions you got?
Yeah, Dylan, thanks for joining us.
John.
So how have you thought about the hash rate? Is this it's up, 70% since 2017? What do you think it looks like moving forward?
Yeah, 70x since 2017. And I think it continues to just kind of bend up and to the right. It's hard to see that sort of exponential growth as we kind of get closer and closer to not the end of Moore's law, but as Moore's law kind of slows down a little bit. I'm not calling an end to the efficiency of semiconductors and computing power, but you've started to see somewhat of a commodification of ASICs of Bitcoin miners. An S9 has been around for I think 4 or 5 years, and it's still spitting off a lot of free cash flow, a lot of profit. And so, I think that the new miners today, you'll be able to plug in for quite a long time and for them to be quite profitable. Whereas, say, the mining rigs or, the USB sticks that you could plug into your laptop from 2012 aren't going to be profitable anymore. You can't mine Bitcoin with GPUs and be profitable. But I think a lot of these ASICs will be around for a long time, despite the fact that Bitcoin hash rate, I would think is going to probably 10 or 100x over the coming decade, just with the pure amount of incentives that will exist for people to plug these machines in. I think every energy producer is going to get involved and in a big way, but we're just starting to see that play out.
How do you think about the consumer, like the retail consumer, getting involved in mining versus
it's pretty
guys?
It's pretty exciting. I think we're going to see. I believe we're going to see, especially in cold regions or climates, the rise of the home miner. Some very, very savvy kind of engineers or Bitcoiners, if you want to say, have been doing this already. But the reality is, these miners kick off a lot of excess heat. And so doing it somewhere that's pretty cold is actually, you can kind of get a 2-for-1 where you're mining Bitcoin and you're producing a lot of excess energy and heat, and that byproduct can actually heat your home. So it's like almost 2 birds with 1 stone. And so it's something that actually I am exploring currently, but I think we'll see that a lot, and it'll kind of just become. I think Square's working on that, right? They're working on building that out in their app, as well as working on an ASIC. So that would be pretty exciting, and I think we're a little bit away from kind of that becoming the standard, but it would be awesome to see in the coming 5 years or so.
I agree.
What I also think would be really interesting, I don't think I've seen one yet that seems viable and commercial, is when you start to get anything that plugs into some sort of electricity and it mines Bitcoin in its off hours. So like I'll use a super egregious, almost absurd example, but like you could see it happening, is somebody builds like a microwave. When it's plugged in, it's pulling a little bit of power, right? Because it's obviously able to display the time and that type of stuff. But is there a world where the microwave pays for itself by being able to mine Bitcoin, even though it's got very little computing power, right? So like that's the egregious example. Like, okay, now walk it back into, well, what happens if all of a sudden you're able to take other things like the Tesla Powerwall? Maybe a good example, right? If they were essentially able to say, hey, look, we're going to use renewable power that's stored in this battery, and we're going to take that and then build kind of a mining component to it. And you can actually, hey, when you're not consuming the power, if you don't, if you're running out or of capacity or something, just go ahead and almost like quote unquote burn it. But you're burning it by using it to drive some sort of monetary value and help secure the decentralized Bitcoin network. Like, I think, go ahead.
It's pretty interesting. I think Bitcoin mining kind of will almost like flatten out these disparities in energy prices across the world, right? You're seeing you're seeing a huge energy crisis in Europe, right? So Bitcoin miners in Europe currently, they're probably not going to be on full tilt, right? They're gonna instead sell their energy to the grid, right? You're seeing a lot of like grid miners that like in Texas per se, that are establishing this baseload energy demand, and then when demand spikes, they turn off. And so you can see that kind of at a micro level, right? Where say maybe not a microwave, but say a water heater, right? So a lot of these things are continuing to be built out, and there's engineers all over the world kind of working on this stuff. Bitcoin mining with immersion cooling, right? It's kind of like these ideas that are coming out of nowhere, and they're really fascinating. And I mean, we're just scratching the surface in terms of what can be done with kind of this newfound demand or ability to take energy from anywhere and turn it into sound money. And so I think the applications and the engineering feats that will be built on top of this and around this network is something that I can't fathom, and I'll let other people figure that out.
Last question I have for you is going into Christmas. You got any advice for folks in terms of how they can help orange pill their family?
That's a good question. Yeah, I mean, I would just say everyone, it takes time, and everyone will kind of come to Bitcoin when they're ready. But just planting the seed about what sound money and a low time preference does is important. Kind of just distincting Bitcoin from a lot of speculative investments, and even Bitcoin itself on a shorter time frame is speculative, right? So maybe showing the 4-year DCA returns, which I don't know off the top of my head, but I know they're pretty strong, and just kind of preaching a low time preference, maybe saying, why is everything getting more expensive in the world, whether it's housing or food or energy or anything else, right? And kind of establishing that it's not a result of greedy corporations, as maybe an Elizabeth Warren would say, but it's more so about an expanding money supply, and just kind of planting the seed, because ultimately everybody will need Bitcoin. Everybody will own Bitcoin. And that may sound controversial today, but I think 10 years from now, it won't be at all. And so just kind of, planting the seed with people that you care about is definitely a good gift to give, at least for their future self.
I think that's a great way to end it. If we do a quick follower check, 98.8, man, we're about to cross 100K. I think we were talking, what, you were at 50K a couple of weeks ago?
Yeah, I think the first time I came on, I was a little bit under that. And so definitely getting close there.
Making moves, John.
Yeah.
Where you at?
I'm at right under 60. And Dylan, just congratulations.
Dylan was like,
when you provide good content, though, people go to it. So
that's how the world
success.
That's how the world works. All right, I'm going to drop his Twitter account in here. If you're not following Dylan, get with the program. Let's go. We got things we got to get done. So Dylan, thank you so much for doing this. Have a Merry Christmas, Happy Holidays, whatever the appropriate thing to say these days is. Just enjoy the time with your family. And then I guess next Tuesday is the next show that we'll do. So Dylan will be back. The next time that you guys see us, you'll see Dylan, which will be pretty good.
Sweet. Happy holidays, guys. Thanks for having me on.
All right, buddy. Sounds good. Thank you.
Catch you later.